Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Plug Power, ticker symbol PLUG. And so here I am recording this on Saturday, October 26th, after Plug closed on Friday the 25th at a price of $2.15, being up about 1% on the day. And so, yeah, I wanted to follow up on the chart because I think it's been doing some really interesting stuff. And I think that what's going on with the chart is looking really bullish. But there are some things that do make me think we could be heading down, but I think that's less likely. And really, yeah, I mean, I'm just excited about the chart, but I am getting a little impatient. I don't know about you guys. And I think that's kind of like, one of the most bullish indicators is that seeing the price get up to the high of, let's see, $2.42 on that would be Tuesday the 22nd. I want to see that continue to go higher, but we have just been, consolidating right around this purple downtrend, which, as I did go over in, I believe, last week's video, that this could be the neckline of an inverse head and shoulders pattern, where we have the left inverse shoulder here, the head here, and perhaps the right shoulder here being kind of a small one, or, maybe this all could be considered that right inverse shoulder, or maybe this is a cup with a handle here, and this consolidation also with that consolidation forming higher lows. I think this is looking really, really good. And so what we can see here from this uptrend, the two pivot points that I have, one is the low from September 6th, and the other one, as you can see here, is the low from October 11th. That is how I get that uptrend, and we can see that even if we include the low from over here, this low is at 160, the low here on September 20th was at 187. Over here, the low on October 11th was 194, and over the past week, so these 5 candles here, starting on the 21st with this big green candle going up almost 6% on the day. So following that, the low that we saw for the last week was at $2.05. So we are putting in higher lows. And also right here, I have talked about this in a few of my videos, actually a handful of them. I do really find the pattern to be intriguing, which is the rising three methods, or the inverse of it, which is the falling three methods, where you have a big candle over here, this big green candle here, followed by 3 candles, 3 inside bars coming down before getting an engulfing reversal candle to the upside. That is a rising 3 methods, or here you could think about it as a rising 4 methods, with this candle at the end suggesting a lot of strength and continuation to the upside. So, I think just right there, that looks really good. And let's see some other levels that stand out in the chart. Here, if we look at this light blue Fibonacci retracement that I have, going from that low of 160 up to the high from September 30th, which was at a price of $2.30. From that, we can see the 50% retracement there at $1.95, or right around $2 a share. That is the low that we pulled back to, hitting a low on the 11th at 194. As I had mentioned. So I find that to be a pretty neat level. Also, being similar to that with a retracement, we do have this yellow one here with that 1618 at about 164 that did serve as a very nice level for buying the bottom there. But then we also have some levels here to the upside that do look like they're acting as resistance, not only with this neckline here, but I do have these 2 red lines. So I just want to take a step back to go over those. And so one of them is the low that was hit on July 2nd, which was at a price of $2.21 there. And so that does appear to have been some resistance, is acting as resistance, as we did get a wick high on Friday of $2.27, being rejected from not only that prior low at 221, but also this other red line here at $2.26. And so if I do take a step back, we can take a gander at that level, which to me, this always throws me off. It looks like that level is uptrending, but it is not. That is a horizontal ray based on this pivot point, the low from January 18th of this year of 2024. We hit a low of $2.26.3. We did rally from that low going up. Let's see. I just need to adjust this so we can see it, over 100%, about 127% to the upside. So a very nice, massive move to the upside there, following arriving at that red line, hitting that pivot low before going up. Then once we return to it, we did another move, which I imagine is going to be right around 100% there. And that took place over the course of 13 trading days, so about 3 weeks. So a pretty impressive move over a short period of time. And then we also did hit that level over here before rallying again, but probably more likely to be right around 50% there, as you can see. And so because this level has acted as very notable bottom level, great dip buying discounted levels right there, that has been support in the past, very notable support. I do think that we will be seeing it acting as notable resistance. And that is exactly what we have seen. Following our first day trading below that level at the beginning of August on August 2nd, that level has acted as resistance. So, pretty impressive there that once we did break below it, we have spent, effectively 3 months below that level with these little blips going above it. And so, one of the things that really stands out to me, at least personally, as far as my position goes with Plug, is that, I was very patient in establishing a position in it. I didn't have one when I first started covering Plug, but over the course of, let's say, the past 6 months, I don't know exactly, I have been accumulating a larger position. Still, I'm sure it's not that big of a position, as I am a pretty small fish, but, it is a much more sizable position than I was originally anticipating getting. And with that, slow accumulation that I've had, my average is right around $2.25. And so, for me, at least personally, with the scenario that I am working with, I view this chart and I say, oh man, I could have gotten out at break even here and then bought back below $2 a share. And then, and that happened over here. This has happened multiple times with the opportunity for me to get out and then buy back lower. And then just recently we saw that again, and now we're closing over the weekend below my average. And so I'm thinking, man, I should have at least sold a portion of my position so I could buy it back closer to $2 a share. But I think that is a psychological game that the market is playing with me, the market is playing with you, that we are getting antsy about this. Is it going to break out? Are we going to see it rally up to 261, up to that measured move? I believe that's taken us to around $3 a share, filling this gap here at 292. And just to check myself, I'm going to do that measurement really quick right here. And so we could see that, yeah, price would be going up to around $3 a share, and I suspect higher. That might just be the first leg up. And so with us being toyed with us being played with at this level, whether that's 226, 221, whatever our averages are, we are looking at this chart and thinking, man, I could have trimmed here and bought back lower, and then I'd have a much lower average and I'd have more shares. And so what I think is happening is the next time, or maybe the time after that, that we get up to 226 or maybe get up to 250, we're going to see it really take off because, a lot of us, and I'm thinking about it, I've thought about it, maybe I should trim when it's up because it's probably going to pull back down. I don't see that. I see that we're putting in higher lows, and I see that we are starting to break out from these levels, going little by little, first wicks getting up to them like this purple downtrend, or wicks getting up to those red levels, starting to get some candles above them, and now we even saw a close notably above all of those levels, but then we pulled back, but to a higher low. And so I view that perhaps in this coming week or maybe the week after, that we will be seeing some violent moves either to the downside, maybe coming back to the infamous 186 here, marked by this orange line, or what I feel like is more likely that we really start to rally and break out, carry out that measured move from this inverse head and shoulders, get up to $3 a share, perhaps start consolidating up there and start to make our moves higher, perhaps up to right around $5 a share, which would represent a more than 100% move to the upside, just like we saw back here when we bounced from that red line. So once we get above that level, I think that we could really be taken off like we have over here. There's a lot of fuel built up that we have been consolidating down here. And so, I think that we're probably going to be breaking out, although perhaps, I'm jinxing it by not trimming my position when we get up here. You sell it and it starts running. You hold it and it drops. So maybe I should trim. Maybe I should do that. But, I feel like this is going to be heading up to $3 a share. And, I've been patient. And so I think that that's all that we need to do. Just be patient. We have formed this bullish pattern with other bullish patterns inside of it. We are forming higher lows. And we have a very clear target of right around $3 a share. And so I suspect that in the next couple weeks, we will be seeing some very nice price action going up to $3 a share, which from current price is right around a 40% move to the upside. So that is what I am looking forward to. I am being patient. I am being disciplined. And, I am really looking forward to that. And I hope you are too. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching and have a great weekend, guys. Take care.